the show.
Never a dull moment in this market, bro. So much stuff we could talk about this week. It's quite unbelievable.
Let's talk about it.
One thing I'm gonna talk about in the newsletter, because I already had the podcast kind of squared away, but one of the big topics in at least the financial media that I follow here the last day or so, the AAII is retail investor sentiment, and it's the American Association of Individual Investors, it's AAII, and it's a along with like CNN Fear and Greed Index, it's a measure, it's a contrarian measure of market sentiment. So when AAII is extremely bearish, the retail investors, are really bearish. They think the market's going down. It's at a little over 60% bearish right now. Basically 20% are neutral and 20% are bullish. This is the seventh highest. It's only been above 60% 7 times since like the 1980s, and they were always at the bottom. The bottom in 2009 was the highest level. It was above 70% bearish, which makes sense because the market was down 55% or whatever at the bottom. The other ones are like COVID. It was below 60%. All the big market drops in 2022, October 2022, it was down 60%, but the market was down 25%. It's over 60% right now, and the market's down like, as of a couple of days ago, 3% for the year. But the 3% from the most recent top. Sorry, from the most recent top. So everybody is very worried. The market has barely budged. So either everybody has a reason to be worried, which has pretty much never happened before. This is whenever bearish readings get like this, it is always a bottom.
Yeah, we're definitely not at a bottom.
It doesn't seem like it. No.
But I would also say that we haven't seen a range bound market this long. I can't remember the last time, and so that could be what it looks like when you have it going sideways this long, right?
Yeah.
You could get people, they just don't know what to do.
This is a lot of uncertainty. That's for sure.
Yeah, I don't know anyone right now that knows what's going on. I mean, if you get anybody to tell you what they think is going to happen, they're just making it up because it's just been going sideways for so long and in such a pretty large channel too. Mm-hmm. That's the other part that's kind of it got a little smaller for a while, but it went right back to the big channel. I keep those two channels on there every day to kind of keep that at the forefront of my mind. Is like, sure, if it goes from where it is right now to the most recent top, that's a good little rise, but it's done that like time and time again. And now it dropped all the way back down, to where it is. And it's kind of like at the bottom of that larger channel. I wish I could, I don't have that to show, but
I think I have it.
Yeah. But anyway, I mean, I find that interesting. And when you add this, this indicator you're talking about, it's not surprising because, I mean, I wouldn't call this a bottom, right? I mean, if it is a bottom, great, then we're off to the races. But it's just, I could see why it would be that way, based on the fact that it's been going sideways for so long, for so many weeks and months now. We're going into the third month. I can't remember when it started.
I mean, that's true. So markets can correct either by price or time, and so they're correcting by time when they go through a range bound market for a significant amount of time.
Yeah. December, I just looked it up. Basically, like the
peak in December,
middle of December, till now. So that's months of sideways, and that's not normal in an election year.
No, I mean, seasonality, like this is supposed to be the best, historically, seasonally, the best time of the year for stocks.
Yeah.
But Yeah, it can go if it goes sideways, and people get very bearish. That can be the base that's forming for the setup for the next leg higher. It absolutely can. I don't know how, from a macroeconomic perspective, you get there, but but I mean, tech. We're going to talk about tech, but tech obviously is rolling over big time, and they're the biggest, market cap in the S&P 500, and the rest of the market is sort of stabilizing. The equal weighted S&P is up 0.5% today, and the regular S&P is flat to down. I mean, today's going to be a crazy day anyway, but yeah, I don't know. It's in hindsight, it's either going to be the market corrected in time, and we're doing the next leg higher, or this is a topping pattern, and people have reason to be fearful because it's going to go low from here. But we will take it as it comes. All right, so look at what happened this week, and then the question is, we have this collapse of big tech. Is the consumer collapsing along with it? So we'll take a look at a couple charts on that, and then Bitcoin has been quite the collapse in Bitcoin the last week. It hasn't been very long, but it's been pretty deep, and the TSP fund charts. So Monday, the Dallas Fed Manufacturing Index. Last week we talked about the Philly Fed Index and the Manufacturing Index and the New York State Manufacturing Index. This week the Dallas Fed comes out. It dropped 22 points to minus 8.3 in February after hitting an over 3-year high of 14.1 in January. S&P is down 0.5% on Monday, but that Dallas Fed Manufacturing Index, same kind of thing we've been talking about a little bit. The economy is basically two pieces, right? Services and manufacturing. And so at the peak of the S&P in 2021, as you would expect, manufacturing had been rising from COVID, and eventually it peaks out, starts to roll over, and rolls over going into the peak in the S&P in 2022, beginning of 2022. And then anything below that zero line is contraction. You could call it recessionary. It's because a lot of people are saying, we did in fact have a recession in 2022, except it was a manufacturing recession, and not, if you combine both manufacturing and services, the number didn't hit it, but we certainly had it in manufacturing. We started to get an uptick in the last few months in 24, and then it's fallen off the ledge over the past 2 months. So we shall see. It's not a bullish chart. Tuesday, Case-Shiller Home Price Index year over year rose 4.5% from last month's 4.3%. So that's the third consecutive increase. The problem is that the Fed doesn't use Case-Shiller Home Price Index. They use a thing called Owner's Equivalent Rent, and it's about 40% of the overall value of the CPI inflation. So the Fed is going to have a tough time cutting rates if housing prices continue to go higher. CB consumer confidence dropped to 98.3 from 105.3. That was a big drop in consumer confidence, and the S&P was down 0.47%. Then Wednesday, Mortgage Bankers Association 30-year mortgage rate drops to 6.88%, which is consistent. If you've been looking at the F fund at all, the F fund has been going up for the past few days or week or so, which means yield is coming down, and yield coming down means interest rates are coming down, and so mortgage rates came down a little bit. But we also had fewer applications. They were down 1.2%. They had been down. They were down 6.6% last week, and they were down another 1.2% this week. Very difficult for home buyers out there. Thursday, initial jobless claims were up a little bit, 242,000 versus 220,000 last week, and they were higher than the 225,000 forecast. And then Thursday was a rough day. S&P is down 1.59%. And then Friday, we have core PCE, which is personal consumption expenditure. It rose by 0.3% versus 0.2 in December and 0.1 in November. So it's the third consecutive higher month for personal consumption. And again, it's a measure of inflation. So at best, it just means inflation's sticky. At worst, it's accelerating to the upside. It's almost 10:30 as we're recording this. S&P opened flat, fell a little bit, recovering a little bit here at about 10:15. So we will see how it ends the day. All right. Collapse of big tech and the consumer. So tech, as we know, is it's what's been driving this bull market since the bottom in October, certainly since 2023, but really since the bottom in October 2022. Most of it is AI driven. Apple is the biggest company by weight in the S&P 500. It accounts for 7.19% of the overall S&P 500. Nvidia 6.37%, Microsoft 5.88%, and Amazon almost 4%. So the total between four companies is almost 25% of the S&P 500. So what happens with those four companies, critically important to what happens with the overall index. So Apple, biggest company in the S&P, this is what it looks like, going back to the middle of 2023. You can see the value of the 200-day moving average line. It's the green line right here. It doesn't always necessarily find support there, but generally it does. It generally doesn't get too far below that 200-day as long as the 200-day is positive. You want the 200-day moving average line to be moving up. When it's moving down, it's not good. So overall, the 200-day has been moving up. Anything above 237, right? This was the peak last summer, before we got that correction last summer in the overall S&P. And so anything below 237 is not good for the biggest company in the S&P. It's below where it was at the peak before we started the correction last summer. And it is below it today. So we'll see what happens with Apple. It's going to end up being in this trading range at best if it gets below 237. Nvidia earnings came out on Wednesday, I think Wednesday night. Thursday wasn't a horrible day, or Wednesday wasn't a horrible day. Thursday, we're down 8.5% almost. We're down right to this upsloping trend line, right? Pretty much sitting on it, and that 200-day moving average line. So it's kind of make it or break it for Nvidia at this point. Microsoft, this is without a doubt the worst looking chart on the Magnificent Seven. You had an initial move down, a bear flag pattern. I'm looking at that as a bear flag pattern. If it breaks this lower trend line, which it did right there, it's a completed bear flag pattern, and the next move is down, which it's in the middle of right now. A lot of times, if you get below the 200-day right here, you're below that trend line right here, came down, came back up and tested that 200-day moving average line and got rejected there. So it was acting as support all the way along here, right? When it broke it, came down, came back up and retested it, and it acted as resistance instead of support. Comes down, it'll come up, the 200-day will start coming down. If we get something like this, right, that's how the moving average lines work. That is not a good chart for the third biggest company in the S&P 500. And then Amazon. I did a little bit longer take on Amazon because it's pretty close to its peak in 2021. So we got, it was resistance there. That was the peak in 21. Pullback came up, hit resistance there again, couldn't get above it. Tried to get above it a bunch of times, right, in 2024. Finally broke through and got above it. So we had a little rally from there in the last half of 2024. And then it rolled over. Peaked in December, like a lot of things did, and rolled over. And so that's you can see the channel right here. If we get, the pen's not working. way. Maybe it'll sort itself out. If we get down here below 195, then we're looking for support at 188, which is that prior high from 2021. Okay, Conan, do a little talk for a minute because I'm stuck.
I'm going to tap dance a little bit.
Yep.
He's going to have to reboot his computer. Yeah, I was just sitting here while you were talking about that and actually looking at, digging into a lot of the different companies that are in the S&P. And, yeah, it's without question that we're in a time of confusion, and I think a lot of people kind of are giving a lot to the administration and just not sure what's going on. And
tariffs is the big thing that everybody says, right?
Yeah, I mean, if you just think about if you were one of these large companies and you had been used to operating for 30 years, 40 years without things like tariffs, or with an administration that has this sort of economic philosophy, right? More of a business philosophy than a political philosophy. And I'm trying to stay apolitical on this because I really am when it comes to this kind of stuff. I don't care. I mean, I have my political thoughts, but when I'm talking finances, I don't care about politics. I care about economics. And so what you have, though, is you have a lot of confusion, you have doubt, you have angst, which is never good for the market.
Nope.
But if you're a business person, that's kind of where you want other people is not knowing what's going on because you've got a plan, you've got an agenda, you've got a thing you're doing. You're not telling everybody about it because if you do, you lose a lot of your
edge. Yeah,
you lose a lot of your power to negotiate. Which this administration is pretty decent at. I'll give them that. Right? They're good at negotiating. Whether you like what they're negotiating is I'm not talking about that. I'm just saying negotiating in general. So that's kind of how I think about it. Is either the consumers or the large companies get into this zone where they kind of like trust it. I don't know what's going on, but I trust it. Mm-hmm. That starts to push in the right direction. Or, we start being more transparent. We know what's going on, kind of thing. Yep. You either got to trust the wizard behind the curtain, or you don't.
That's essentially the definition of sentiment. Either you trust the market's going to go higher, right? Yeah. And that's the problem, or problem's a bad word maybe, but that should be what's on the mind of buy and hold investors right now.
Oh, I don't know how. I mean, we feel like we're on the right side of the theory here, but right, because we're active investors. Not to say that our models are perfect, but they respond to the market. Buy and hold doesn't respond to anything, right? It's got to go with the market because that's the whole point. Yep. And so if you're sitting there right now looking at it and you're just like, I mean, first of all, I wouldn't be looking at it. I'd just be like, I can't control it. Right. So anyway, back to the kind of the sentiment thing, because I think this is really important. It is one thing, and it's very simple to other people, but it did take me a long time to grasp. And I'm a slow learner, but when people used to talk about the market, I always thought of it as this thing, this entity, and it's just people. Mm-hmm. Right. And so people are people, right? We're humans, even if it's a large group of people, an institution or, whatever. The point is it's people, and people are emotional. Yep. We try not to act with our emotions, but we do. That's why we have fear and greed. That's why we have all these sentiment kind of indicators because we're human. And so when you look around and you see the confusion you see right now and the doubt, that's how this plays out in the market. And it's I would rather it go sideways for 6 months than go down for 6 months. Yeah. And so,
well, I would rather go in one direction or the other. It's much easier for me.
That's true. That is true. I mean, this goes back to there are times in the recent past when optimism was so high for no reason. Yep. Right? Like all the information that's coming in is like, no, the market's going to go down. It's going to go down. And all the investors, retail and otherwise, are like, no, I think it's going to go up, which that makes it go up. Yep. Right? And you're like, oh, wait a minute, it's not supposed to be going up right now. Right? So it's so odd, although it's pretty simple. It's just people.
Yeah.
And Jerry's computer's been back up and running, but I just got on a tangent there, so I thought
we're good.
All right, let's get it back to Jerry.
All right, so Amazon, another really big one. If we get much lower in Amazon, if we don't find support here again from last summer's high, we're in this channel, and hopefully we do get support here at 188, which is all the way back to the 2021 highs. So we'll see. Those are the biggest companies in the S&P 500, and none of them look great, at least in the short term. And hopefully they find support at those key levels. The last one really is the consumer. It's consumer discretionary stocks. Okay. It's pretty much back to where it was at the top right before we collapsed in 2022. So if we lose consumer discretionary, the best case scenario is we get support here at its 200-day moving average line. If we get below that, it will have been obvious that the market rolled over. But consumer discretionary is a good indicator of what, this is. It's companies that make things that people want instead of what they need. It's kind of the opposite of consumer staples. So the consumer is right on the edge. Okay, Bitcoin is way off the edge. So this is a daily chart of Bitcoin versus the dollar. Okay, so we had peaked back here in March of 24, had this really long basing. It was a great base, and if you were watching the show back then, I don't have it going back far enough, but this was a 4-wave on the Elliott wave count, and so this breakout right there, and if not that one, certainly this one, was a great indicator that Bitcoin was going higher, which it did, and that's fine. And we did some extensions that got it up to I think my extension was 108, and it got up to 109. Double tops. Okay, so we're in this, and it came down and kept finding support there at 92. So we gave it a little bit of extra room, put that support channel in there, and it completely collapsed through it this week. So obviously you can't do Bitcoin in TSP. You can do it in the mutual fund window. So if we were to get back down to the high, this was a peak from a really big run, and then we went into this long consolidation. If we were to get back down to here, okay, that would be a 32% decline from the peak at 109. Okay. If we got support there and you got back into BTCFX, which is the Bitcoin mutual fund in the mutual fund window, and it came back up just to the prior high, just back up to 109, that's almost a 50% gain from where you are. So we don't get that kind of volatility in the TSP. We don't really generally get, they're not that volatile. But this could potentially be a great setup in the mutual fund window if you're watching it. If it does get down to that level and find support, and then you get a green candle, whether it's a weekly or a daily or however you want to look at it, you got a really big upside move. All right.
Yeah, and just on that note for a second, so I'll leave the chart up there so folks can follow along. Like Jerry pointed out, it's a good opportunity if you're in the mutual fund window and you like to follow these things. Another thing that we've started to notice generally across analysts is that Bitcoin is starting to, at least I think sentiment-wise is probably the best way to describe it, sentiment-wise to track with the overall market.
Yeah.
It didn't do that for a long time. It was very different, did not track much at all. And so much big money is in Bitcoin now and so much institutional money and so many retail investors that when that happens, it tends to start tracking, which some people don't like that because they liked it because it didn't track that way. Yeah. Right? Okay, it is what it is. And it doesn't look exact by any means.
It's like 88. The correlation is like 0.88 right now. It's 88% the same as the NASDAQ.
Right. So, but you can see it if you're looking that, okay, if Bitcoin, so So that's another reason why we look at it kind of regularly. I had someone ask me a couple weeks ago, why do you guys always talking about Bitcoin? It's TSP, right? Well, first of all, there's a lot of people interested in it, and it's a podcast, and we want to talk about some things that aren't boring sometimes. Right. And Bitcoin is kind of, on the it's something a lot of people talk about. And so I want to take this opportunity, though, because this came up on the member call I think we did yesterday, or it was the one before, just in general talking about Bitcoin and things like this, and how we don't generally recommend the strategy of dollar cost averaging in the TSP. We could go spend 30 minutes about why, but that's not really important. If you want to, I'll put it in the comments if you really want to know why we don't recommend it. It has to do with the rules and the setup of the TSP. But in this instance, if you are in the mutual fund window, Jerry pointed out a good, what I would call swing trade, the potential there in the mutual fund window on this. Also, outside of your TSP, if you have an IRA account or a brokerage account, like I use Fidelity Crypto. I like it. It's very easy to use because I have other accounts with Fidelity, and they make it very simple to actually buy Bitcoin, right? But I don't trade Bitcoin, right? I dollar cost average Bitcoin. I take a certain amount of my overall percentage of money that I'm going to invest in general, and I take that percentage, it's very low percentage, and I put that in I buy actual Bitcoin through Fidelity every month. But the only reason I do that is because I believe in the hypothesis. Yep. Is that the right one? Yeah. I believe in the theory that Bitcoin is scarce, meaning it will have an end that they don't make anymore. Yep. And if you have scarcity, you have demand. You have high demand. If you have high demand, prices will generally rise right. So if you have to buy into all of that to say, okay, this is probably a good place to do something like dollar cost averaging. For instance, right now, that big drop is great. For this particular strategy, right? Because I'm putting the same amount of money, but I just got more Bitcoin.
So in TSP, we don't have any control over that because every payday, however it happens, which day exactly it happens, I have no idea. But they take some money out of your paycheck and they contribute it to TSP, and you're buying the C fund or whatever your percentages are at whatever the price is. It doesn't matter if the market's up or down, you're buying at that price. If you were in a mutual fund window, you can do it, or a brokerage account or whatever. If you're looking at this and you're generally going to dollar cost average, say the Bitcoin mutual fund, you could buy. I mean, it's down now like 25% off the high. So you could. That's pretty good. I mean, that's a pretty good decline. You can contribute today, right? Buy now. It might go down more, but you just buy more because that's the whole point. Because in the big scheme of things,
you can't buy. Let's just be clear though. You can't buy cheap in the TSP. Mutual fund window goes more to the rules of regular brokerage accounts.
Right.
So it does work. So I just want to not confuse people, because if you listen to us all the time, you're like, well, you guys are telling us all the time you can't buy low, but can't buy cheap in TSP. We're not talking about that mutual fund window, because we do get questions a lot about why don't you guys talk more about the mutual fund window. We generally don't, because the percentage of people that are actually using it is so low.
Yeah, it's really low, and it's too bad because sometimes people get scared off that it's like $28 to buy and 28 to sell, but you have to have at least 40,000 in your TSP, so you can have at least you have to have a minimum of 10% or $10,000 in the mutual fund window. So even at the very minimum, $28. If you're right, if in Bitcoin in this case, if the mutual fund goes in your direction, that $28 is gonna get. You're going to get it back the same day that you buy the Bitcoin.
Yeah, and again, you're not going to day trade the mutual fund window, so don't take it to the extreme. But if you have a good setup like this, I think mutual fund window is a great place for swing trading. If you're a member of our site, you can go in and see the models that we put up today, and those are great opportunities because you can kind of see the setup. It's like what Jerry just did. I'll bring the chart back up. You see the setup for there. It's obvious. Like, it's not even hard. It's not even a very detailed technical analysis. It's just a few lines, and you can see, if it bounces off that lower level there, and if you go back farther in history and you can't see it on the chart, that is generally what happens with Bitcoin. And it'll go on its next leg up, and boom, you would have made a great trade. Now, you can do what I do, and just leave it in there. Or you could, take your profits and put them somewhere else. Put them back in the TSP. I don't know, or in the other funds. But anyway, we probably talked about this long enough.
Yeah.
But
Well, I know I got one more chart on it, and I can't remember why I put it up. Oh yeah, no, I do. Okay, back on the chart there. All right. So like you said, if you go back in history and look at it, this was the peak. So the last chart we only went to the peak here in 2024. It's the same peak in 2021 at the top, right? In the big scheme of things, this is a cup and handle pattern that broke out right there, right? It was a cup and handle pattern. It was a 1, 2, 3, 4. When it broke through there, the 5 was pretty much a foregone conclusion. That's why we talked about it a lot on the podcast and the newsletter, because it was a really, really obvious setup. But now that you're at a top of a wave 5, the idea is you get an A, B, C down somewhere to the area of the prior 4. So that's how people talk about we can get back down here to 50 on Bitcoin. It's Bitcoin doesn't have earnings. It doesn't have all the fundamental characteristics of a company.
It makes it difficult. It does have fundamentals. They're just not the same, right? I mean, you can Google it really quick, and there's plenty of people that talk about the fundamentals underlying what is happening, mining and the use on the blockchain and like all these things. So there's fundamentals, but they're not like a company's fundamentals, a company's financials. Most of the analysts that I follow that are following digital assets in general, not just Bitcoin, but it's definitely easy to see that the Bitcoin could go down to like 70s, low 70s easily, and then take off again. And so if that's the case, just like Jerry said, I mean, that's a great setup.
It is. This is not unusual to have a long-term cup and handle, a breakout, a retest of the handle, and then it goes straight up. I mean, it happens all the time. And it's long-term. So this is a weekly chart, right? And we're going back to 2021 at the peak here. So this is a really long cup. The handle was almost a year long. The breakout was really fast. A pullback to the handle, and then it keeps on going. It's absolutely possible. So the only reason we do this is we're not telling you guys when to buy and when to sell. I mean, we're showing the setup, and so I would put this on my refrigerator and wait to see if it comes down to that level, and if it does, and if it finds support, and you get a green candle for a week, let's say. It's a low risk entry point. All right, TSP fund charts. So these are the charts at the close of Thursday. Who knows what happens by the end of the day on Friday? But this is the C fund on a weekly chart, right? This is the 20-week moving average line. We talk about it all the time. This is the relative strength indicator. If the C fund closes where it closed on Thursday, so let's just say Friday is flat, it'll be the first weekly close below that 20-week moving average line since back here in 2023. All of 2024, once we got back above that 20-week moving average line in October of 23, we stayed above it. So this one is a little bit hard to understand. You see it's filled with white inside it, right? What that means is at the beginning of the week, we opened at the bottom of the rectangle. By the end of the week, we closed at the top of the rectangle. So for the whole week, we closed above the line. So we have not closed the week below the line since October 2023. Doesn't mean that it can't, recover and keep going higher. But like we said, this has been a pretty long sideways consolidation. So if it breaks down here, it's likely it keeps on going down for a while. And as we've also been talking about quite a bit, the relative strength has been declining as price has been going up. So the rally has been weakening as it's been going along. What you really want to see is like here, where relative strength is going up as price is going up, right? You want to see relative strength supporting price going up. You can have pullbacks, and that's fine, but you want to see a continuing higher highs in relative strength, and we have not seen that for quite a while. So it's just telling us that, a top is coming, and maybe we're in the topping pattern now. Who knows? S fund, obviously quite a bit more concerning. It's a little bit more volatile, so it does have weeks where it did close, a little bit below its 20-week moving average line. But this is something quite a bit different, right? Gap down at the beginning of the week. Last week it closed below the 20-week. Gap down on Monday, so it opened right there, and then Thursday's close is right there. So the S fund is not looking good, and we are below 50 on relative strength. We haven't been below 50 on relative strength since, no surprise, October 2023. Every time we got a pullback, we got support at that 50 line on relative strength, and it failed this week, at least as of Thursday. So we'll see. That is not good for the S fund. And the I fund had been rallying. Again, it has to do with the dollar. The dollar, if you looked at a chart of the DXY, dollar rallied and pulled back to its 38% retracement level. So depending on what happens there with the dollar, the I fund, this could be the peak in the I fund, and the I fund starts rolling over, which, to be honest, that's what I expect to happen. F fund has the most potential right now. Certainly, we got this ABC correction. It's been rallying. It was several weeks right on that 20-week moving average line, and then this week broke out to the upside. So F fund is probably it is the best looking chart in the group. If the stock funds really collapse, if the stock funds start breaking down through the channels that we've been talking about, the F fund likely goes much higher. If the stock funds start rallying from here, the F fund probably starts going sideways again or rolls over or whatever. And then there's, of course, always the G fund that keeps going up and to the right. And so you can look at the chart of the F fund and go, well, why wouldn't you want to be in the F fund? Well, you can. You just have to weigh it against the guarantee of the G fund and the possibility of the stock funds going back up. Interesting times, for sure.
Questions. If you have questions, put them in the comment section wherever you find this video. If you don't have a comment section, you can always shoot us an email at support@growmytsp.com, and the support team will get it over to us. If you like the show, please share it with your friends. If you don't, share it anyway. Hope you guys have a great week coming up, and we will see you soon.
Out of here.